Polymarket plays and analysis. Iran conflict. Important disclaimer, this video is for educational and entertainment purposes only. Nothing in this video constitutes financial advice, investment advice, or any recommendation to buy, sell, or place bets on any prediction market. Prediction markets involve risk. Past odds are not indicative of future outcomes. Always do your own research. The host is not a licensed financial advisor. Good evening, and welcome to Polymarket Plays and Analysis. Tonight, we're focusing on a region of significant global importance, Iran and the broader Middle East, examining several active prediction markets on Polymarket that reflect current sentiment regarding potential future events. These markets offer a unique snapshot of collective expectations, though it's crucial to remember they are not forecasts but rather expressions of probability derived from trading activity. Let's begin with perhaps the most consequential market. Will the US invade Iran before 2027? According to Polymarket data, this market currently prices a 17.5% chance of such an event occurring, while there is an 82.5% probability that it will not. This suggests the crowd of bettors believes a full-scale military invasion by the United States remains relatively unlikely in the coming years. However, given the substantial trading volume of $58.5 million, this market clearly attracts significant attention and capital allocation, reflecting considerable concern about escalating tensions between Washington and Tehran. The sheer amount invested indicates participants are actively weighing various geopolitical factors influencing this possibility. Moving to market number 2, will the Iranian regime fall before 2027? Here, we observe a markedly different picture. Odds indicate a 93.5% probability that the current Iranian government will remain in power through 2026. Conversely, there's only a 6.5% chance of its collapse. This strong consensus among bettors suggests a belief in the regime's resilience and ability to withstand internal or external pressures. The volume traded here is substantial at $24.6 million, reinforcing this conviction. Considerable funds are being placed on stability rather than upheaval within Iran. Next up is market number 3. Will Iran possess nuclear weapons before 2027? This market shows an overwhelming expectation that Iran will not acquire a nuclear arsenal within the specified timeframe. Odds currently stand at only a 4.5% chance of Iranian weaponization, with a corresponding 95.5% probability against it. The relatively lower trading volume here, $1.2 million, compared to other markets might indicate less intense debate or differing levels of conviction regarding this particular scenario. Nevertheless, the dominant sentiment is clearly one of non-proliferation within the near future. Let's shift gears with market number 4, nothing ever happens, 2026. This market takes a contrarian approach by assessing whether significant geopolitical events will not occur in 2026. Currently, markets suggest an 81.5% likelihood that nothing of major consequence transpires. The opposite outcome carries only an 18.5% probability. The volume traded on this market is $726,000, which indicates a degree of skepticism regarding dramatic shifts in the region's geopolitical landscape. This could be interpreted as a belief in continued relative stability or perhaps even complacency about potential risks. Continuing our review, market number 5 explores, will Iran withdraw from the Nuclear Non-Proliferation Treaty before 2027? According to Polymarket data, odds currently price this scenario at just 10.2%, with an overwhelming 89.8% probability that Iran will remain a signatory to the NPT. The volume of $331,000 suggests moderate interest in this specific question, but not as intense as markets focused on more immediate conflict scenarios. This implies bettors generally anticipate continued adherence to international non-proliferation agreements. Finally, market number 6 asks, will Iran conduct a nuclear test before 2027? Similar to the previous market concerning weapons development, odds here indicate a low probability of testing, just 4.5%. The vast majority, 95.5%, believe such a test will not occur within this timeframe. With a trading volume of $246,000, this market demonstrates comparatively less activity than others. The crowd of bettors appears largely convinced that Iran won't pursue overt nuclear demonstrations. In conclusion, analyzing these Polymarket markets provides an interesting perspective on how collective wisdom currently views potential developments in Iran and its surrounding region. The volume traded across each represents a measure of participant engagement and conviction levels. While these odds reflect current sentiment, it is essential to remember that prediction markets are dynamic. They evolve as new information emerges and perceptions shift. Good evening, and welcome to Polymarket Plays and Analysis. We'll be examining recent developments impacting the ongoing tensions between Iran and the United States, as reflected in relevant markets. Reports indicate that Houthi forces have conducted a deadly attack within Yemen, resulting in 6 reported fatalities. The Houthis claim responsibility for striking a ship they allege was carrying Saudi military equipment in the Red Sea. This action underscores the continued activity of Iranian proxies in the region and highlights their capacity to directly impact maritime traffic vital to global trade routes. Markets suggest that this escalation could increase concern over broader regional instability, potentially influencing positions on markets related to conflict intensity or expansion beyond initial parameters. Further illustrating Houthi actions, reports detail an attack by these forces targeting what they describe as Saudi military buildups in the Yemeni provinces of Marib and Hadramaut. The attacks involved missile and drone strikes, reportedly resulting in at least 30 fatalities among Yemeni government troops. Given the Houthis' alignment with Iran, this represents another instance of Iranian influence manifesting through a proxy group within Yemen's ongoing civil war. According to Polymarket data, such persistent actions by proxies contribute to an environment where escalation is perceived as more likely, affecting sentiment on markets assessing the probability of direct military engagement between Iran and the United States. Recent events involving Iranian footballers provide insight into internal dynamics within Iran. 7 players were granted humanitarian visas and became Australian citizens, however, 5 subsequently chose to return to Iran. While seemingly unrelated to direct conflict with the U.S., this situation reveals a degree of dissent among Iranians regarding existing conditions and potential restrictions imposed by their government. Markets may interpret these events as indicative of underlying social pressures within Iran which could influence its foreign policy decisions or resilience against sanctions. A developing agreement between Iran and Oman concerning the Strait of Hormuz is reportedly in its final stages, according to Iranian statements. This waterway represents a crucial choke point for global oil shipments, therefore, any arrangement impacting traffic flow carries significant geopolitical weight. Neither the United States nor Oman has commented on this proposed deal as yet. Markets suggest that details surrounding such an agreement, whether it involves restrictions, monitoring mechanisms, or joint patrols, would be critical in assessing its impact on regional stability and potential for de-escalation. Currently, uncertainty around the specifics introduces volatility into relevant markets. The disruption caused by the ongoing conflict has led to a significant shift in global air travel patterns. Incheon International Airport in South Korea has become the world's busiest airport for international passengers during the first half of 2026. This surge is attributed, in part, to rerouted traffic previously flowing through Middle Eastern hubs impacted by the Iran-US tensions. The increased volume at Incheon reflects a broader realignment of travel routes and underscores the economic consequences stemming from instability within the region. According to Polymarket data, indicators related to global trade disruptions could be influenced by these observed shifts in air transit patterns. Finally, United States officials have indicated intentions for an indefinite naval blockade against Iran. U.S. Secretary of Defense Pete Hegseth asserted that the Navy can sustain this blockade despite reported concerns about personnel conditions. The implications of such a prolonged blockade are substantial, it would severely restrict Iranian access to international trade and could significantly impact its economy, potentially increasing pressure on the regime. Market suggests that the sustainability of any blockade, considering logistical challenges, potential for retaliation, and international legal considerations, will be key factors influencing positions related to economic sanctions and broader conflict dynamics. Once again, this content is strictly for informational and entertainment purposes. We are not affiliated with Polymarket or any prediction market platform. Nothing discussed here should be taken as a recommendation or inducement to participate in any market. Consult a qualified professional before making any financial decisions.